Okay, let's unpack this. We are diving headfirst into the uh, incredibly dynamic world of crypto today. It's been a whirlwind, hasn't it? From like record-breaking highs that have truly redefined market expectations to significant regulatory shifts that are reshaping the financial landscape and, yeah, even some very important cautionary tales we all need to heed.
That's right. And this deep dive, it isn't just about the daily price movements you might see scrolling across your screen. Our goal is to go deeper, to understand the fundamental forces at play. We're talking the powerful wave of institutional adoption, the relentless pace of technological innovation, and the ever-evolving regulatory environment. These are the elements that are rapidly and, well, profoundly reshaping not just crypto, but the entire financial ecosystem.
Exactly. Our mission today is really to cut through all the noise, pinpoint the most important trends, and maybe some surprising facts from the sources we've gathered, and make sure that by the end of this, you're not just informed, but truly insightful. All right, let's kick things off with a headline news that's captured everyone's attention. Bitcoin, it's been on an incredible tear, hitting new all-time highs above $118,000 and even reaching $120,000 by July 12, 2025. I mean, wow. But what's truly driving this this huge rise?
The primary driver behind this surge is quite clear, actually. It's significant inflows into U.S. Bitcoin spot ETFs. We've actually seen 2 days since their launch back in January 2024 that surpassed $1 billion in inflows just in one day. This isn't just about big numbers. It's a seismic shift. It signals crypto's fundamental integration into the established financial system, pushing it beyond like speculative retail play into a serious asset class for global institutions. That changes everything about how it behaves. And coupled with that, the global crypto market cap just hit an impressive $3.68 trillion, which really reflects this robust and frankly growing institutional interest.
That's a fascinating point about the shift, because what's curious, though, is this paradox, right? Despite Bitcoin's incredible ascent and all this strong institutional confidence, the average retail investor seems, well, a bit hesitant to jump back into the market. Why the disconnect? Is it just lingering jitters from past volatility, or maybe something deeper?
That's a really sharp observation, and it is fascinating. On the one hand, yeah, you absolutely have the memory of past volatility and losses that can make retail wary, sure. But on the other hand, this divergence, it could actually signal a fundamental shift towards more institutional dominance, fundamentally changing market dynamics. It suggests that this bull run isn't just about FOMO from everyday investors. Not this time, maybe. It seems to be spearheaded by massive capital allocations from established players.
Right. And we have concrete examples of this institutional confidence, too, like Norwegian investment firm Aker ASA, for instance. They now hold 754 Bitcoins, valued at $82 million. And that's part of its main capital allocation strategy. It's not just a side bet.
Exactly. And it goes beyond that. Look at Japan's MetaPlanet. People are calling it the Japanese MicroStrategy. They've boosted their Bitcoin reserves to 15,555 BTC, and that's yielding over 95% returns for them. Shows real conviction on a large scale. And, importantly, this institutional trend also extends beyond Bitcoin. The REX Osprey Solana Spot ETF, for example, saw $10.7 million in net inflows recently, bringing its total to $69.7 million. This signals that big money isn't just focused on Bitcoin, they're strategically diversifying into high-potential altcoins. It kind of validates their underlying technology and use cases, too.
Okay, so while institutional money pours in, the true test of crypto's legitimacy, well, it often comes down to how regulators view it. So what's happening on the policy front? And how is it shaping crypto's integration with traditional finance?
Well, we've seen some pretty significant regulatory developments, especially in the U.S. The Senate recently passed the Genius Act, which establishes crucial guardrails for stablecoins, basically, clear rules to ensure their backing and prevent, the kind of instability we've seen in the past. That alone has boosted market optimism quite a bit. And on top of that, the Trump administration's Digital Asset Market Task Force is set to release its first major crypto report on July 22nd. Now, this report is expected to cover a whole range of topics, things like specific regulations, the potential for a Bitcoin reserve, and even crucial access to Federal Reserve payment systems for crypto firms. That's huge for legitimacy and access.
And adding to that, the US SEC is reportedly drafting a framework to streamline crypto ETF approvals, which could definitely ease the path for new funds coming to market, right?
Yeah.
To do some of that prior uncertainty.
Absolutely. And these regulatory signals, they're directly connecting to real-world integration efforts. Take Trump Media, for instance, the parent company of Truth Social. They've filed to launch a crypto ETF. backed by Bitcoin, Ethereum, Solana, and other top tokens. And they're partnering with Yorkville, America Digital, and Crypto.com. I mean, this isn't just a nod to crypto, it's a full embrace, maybe from an unexpected corner.
Yeah, that's interesting. And another key integration point that really caught our eye, the Federal Housing Finance Agency's director has directed Fannie Mae and Freddie Mac to count crypto as collateral for mortgage risk assessments. That's a huge step towards mainstream acceptance for, like, real-world assets.
Definitely. And expanding the scope to Europe, the EU has approved 53 crypto firms under its MiCA framework. This is a massive development. It grants them passport access across 30 countries, meaning they can operate pretty seamlessly across the entire bloc without needing individual licenses everywhere. That's a huge step for scale and could really accelerate mainstream crypto adoption across the continent.
But Bitcoin's story, as big as it is only part of the picture. Beyond the dominant king, the altcoin world is buzzing with innovation and some truly surprising developments this week. XRP, in particular, had a really eventful week. Its price jumped 12% to $2.28. What's going on there?
XRPs. Yeah, there are a few factors driving the buzz right now, some confirmed, some less so. We're seeing rumors, strong ones, that Ripple is applying for a national banking license in the US, which would be, well, monumental for its integration into traditional finance. Then there are these unverified claims circulating on social media, specifically X, about Vietnam's Congress passing a crypto bill that recognizes XRP for cross-border payments. Needs verification, of course. And just for good measure, there was even this supposed glitch on Japan's largest exchange that briefly showed XRP trading at an astronomical $67,720. I'm pretty sure a few traders out there had a heart attack, either of joy or despair, checking that price.
67,000.
Yeah.
Okay.
Yeah. Likely a glitch. Meanwhile, the chatter about a ProShares XRP ETF launching on July 18th, 2025. That has electrified the XRP community, though, official confirmation is still pending. But if we connect this to the bigger picture, these developments really underscore XRP's growing role in global finance, especially for cross-border settlements. It seems positioned as a serious contender for institutional use.
Interesting. Moving on, Stellar's XLM token soared 6% to 0.38880 cents on July 12th, making it the top performer among the top 20 cryptocurrencies by market cap. That's a significant jump for a project that's, well, it's been around for a while.
Right. The driving force behind that surge was PayPal's announcement. They plan to launch their stablecoin on the Stellar network. Now, this isn't just a partnership. It signals significant confidence in Stellar's infrastructure, for fast, low-cost transactions. And it could really position Stellar as a key player in the stablecoin ecosystem. Validates its tech for mainstream use.
We're also seeing this fascinating trend with tokenized U.S. treasuries. They've hit a record $7.4 billion, up an incredible 80% since the start of 2025. It feels like the best of both worlds, maybe.
It really does. This trend represents a growing convergence of decentralized finance, DeFi, and traditional finance. Investors are clearly seeking the stability of government-backed assets, but with the efficiency and transparency of blockchain technology. The surge in these tokenized assets is paving the way for deeper integration between crypto and legacy financial systems. It demonstrates how blockchain can enhance traditional financial products, not just, compete with them.
And just to briefly touch on other notable altcoin activity this week, Sui faced some scrutiny as its foundation unlocked, 5.22 billion tokens, worth $154 million, potentially putting some pressure on its price, which traded around $3.50. We also saw privacy coins like Monero maintaining some bullish momentum. But here's a truly surprising trend we noticed: the rise of made-in-USA altcoins, like Bitcoin Cash, BCH, and Algorand, Algo, outperforming the broader market.
Indeed. That's an interesting one. They're drawing attention for their technical strength and unique use cases, sure. But it suggests that in an increasingly regulated landscape, geographical origin and maybe perceived regulatory clarity are becoming new, powerful drivers, carving out unexpected niches in the altcoin market. This isn't just an altcoin season. Maybe it's a regulatory clarity season for specific assets, pushing them forward.
Interesting take. Now, as much as we love talking about innovation and growth, it's essentially we shift to the cautionary side of the crypto market. While there's immense optimism, the inherent risks, they demand our attention.
Absolutely. And a sobering reminder comes from the collapse of British fintech Ziglu, which revealed a about $2.7 million shortfall in customer funds. The company had suspended withdrawals back in May and entered special administration just last week, leaving thousands of savers facing potential losses, which is awful.
That's incredibly concerning. What does this incident tell us about the dangers? platforms using customer funds for operational purposes without proper safeguards. It really highlights how crucial robust regulatory oversight is, doesn't it?
It absolutely does. This incident truly raises an important question about renewed calls for stricter regulations within the UK crypto space, specifically to protect consumers from similar outcomes. It just underscores that trust and transparency are paramount, and when they break down, the consequences for individual investors can be severe.
Right. And then there's the high-profile criminal case. A 19-year-old from Connecticut was arrested for allegedly stealing over $245 million in crypto through a sophisticated phishing campaign impersonating employees of Yahoo and Google. It's astounding to think about that kind of scale. $245 million.
Yeah, and what's even more shocking, perhaps, is that the suspect's parents were also implicated in an attempted kidnapping to extort additional funds. Just unbelievable. This case really underscores a broader context, though. FBI reports indicate billions were lost to similar schemes in 2024 alone, truly emphasizing the growing threat of crypto scams and the, well, increasingly complex tactics criminals are employing. It's a stark reminder that as the industry grows, so too does the need for extreme vigilance.
So to summarize what we've unpacked today, it's really a market of dynamic tension. You've got institutional adoption clearly driving prices and legitimacy, even as retail investors remain perhaps cautious. We're seeing robust regulatory movements actively shaping the future of the space, with innovative altcoin applications emerging rapidly. Yet, and this is crucial, we must always remember that the persistent risks of scams and platform failures demand constant vigilance from everyone. It's a complex, exhilarating, and, yes, sometimes challenging landscape.
In essence, yeah. We've explored a week where mainstream finance and crypto are increasingly intertwined. New use cases are emerging at a really rapid pace, and the regulatory framework is actively trying to catch up, both to protect and maybe to enable this evolving landscape. It's really testament to the speed at which this whole space is moving.
So thinking about all this, what stands out to you from this deep dive?
And maybe something to leave you with. Looking ahead, given this rapid pace of innovation and these evolving regulatory frameworks in digital assets, how might this landscape fundamentally change our daily financial interactions? I mean, beyond just investment, touching areas like payments, lending, or even identity.
Yeah.
How different could things look within, say, the next 5 years? Something to think about.